Ever wondered how much that short-term loan is really going to cost you? We're talking about those payday loans, installment loans, lines of credit. Specifically, how the interest rates are determined on platforms like CashNetUSA. It's a question that can save you serious money, so stick around because we're diving deep into the often murky waters of interest rate calculations. Now, before we jump into CashNetUSA specifically, let's set the stage. Interest rates aren't pulled out of thin air. They're influenced by a complex interplay of factors, both on a macro and micro level. Think of it like a weather forecast. It's based on a lot of data, but there's still room for variation. On the macro level, we have the Federal Reserve, or the federal. In the U.S., the Fed sets the federal funds rate, which is the interest rate at which commercial banks lend to each other overnight. This rate acts as a benchmark, influencing interest rates across the entire economy, from mortgages to credit cards and, yes, even short-term loans. When the Fed raises rates, borrowing becomes more expensive across the board, and vice versa. It's a key tool used to manage inflation and economic growth. Then there's the prime rate. This is the interest rate that commercial banks charge their most creditworthy customers. It's typically a few percentage points higher than the federal funds rate and serves as another important benchmark for other interest rates. Beyond these broad economic factors, several factors specific to the lender and the borrower come into play. These are what really determine the interest rate you'll personally be offered. One of the most crucial factors is your credit score. This three-digit number, calculated by credit bureaus like Equifax, Experian, and TransUnion, summarizes your credit history. A higher credit score signals lower risk to lenders, meaning they're more likely to offer you lower interest rates. Conversely, a lower credit score indicates a higher risk, which translates to higher interest rates. This is because lenders need to compensate for the increased chance of you defaulting on the loan. Your credit history is also important. This includes information like your payment history, the amount of debt you have, the length of your credit history, new credit applications, and the types of credit you use. A history of late payments, high debt levels, or frequent credit applications can negatively impact your creditworthiness and result in higher interest rates. Now, let's bring CashNetUSA into the picture. CashNetUSA offers various short-term financial products, including payday loans, installment loans, and lines of credit. Because these are typically short-term and unsecured loans, meaning they're not backed by collateral like a house or car, they generally carry higher interest rates than secured loans or longer-term loans. This is because the risk to the lender is higher. CashNetUSA, like other similar lenders, considers several factors when determining the interest rate for a specific borrower. While they don't publicly disclose their exact internal algorithms for obvious competitive reasons, we can infer the key elements based on industry practices and regulatory requirements. Your credit score and credit history will undoubtedly be major factors. If you have a low credit score or a limited credit history, you can expect to be offered higher interest rates. This is standard practice across the lending industry. Your income and employment history are also crucial. Lenders need to assess your ability to repay the loan. A stable income and consistent employment history demonstrate a higher likelihood of repayment, which can lead to more favorable interest rates. The loan amount and loan term also play a significant role. Generally, smaller loan amounts and shorter loan terms may have higher interest rates on an annualized basis. This is because the lender's costs of processing and servicing the loan are spread over a shorter period. Conversely, larger loan amounts and longer loan terms may have lower annualized interest rates, but the total interest paid over the life of the loan can be significantly higher. It's important to look at the total cost, not just the interest rate. State regulations also play a crucial role in determining interest rates offered by CashNetUSA. Each state has its own laws and regulations regarding lending practices, including maximum interest rates and fees that can be charged. CashNetUSA must comply with these state-specific regulations, which can significantly impact the interest rates offered in different locations. This is why you might see different rates offered depending on where you live. It's also important to understand the difference between stated interest rates and the annual percentage rate, or APR. The stated interest rate is the basic interest rate charged on the loan. The The APR, on the other hand, includes not only the interest rate, but also other fees and charges associated with the loan, such as origination fees or processing fees. The APR provides a more comprehensive picture of the total cost of borrowing and is a more useful metric for comparing different loan offers. Always look at the APR to get a true sense of the cost. Now, you might be asking, how can you potentially get a better interest rate on CashNetUSA or similar platforms? The most effective way is to improve your credit score. This involves making timely payments on all your debts, keeping your credit utilization low, the amount of credit you're using compared to your total available credit, and avoiding applying for too much new credit at once. Building a positive credit history is also crucial. This takes time, but it's a worthwhile investment. You can start by getting a secured credit card or a small installment loan and making timely payments. Before taking out any loan, especially a short-term loan, it's crucial to shop around and compare offers from different lenders. Don't just settle for the first offer you see. Compare interest rates, APRs, fees, and loan terms to find the best deal. Finally, always read the loan agreement carefully before signing anything. Make sure you understand all the terms and conditions, including the interest rate, APR, repayment schedule, and any fees or penalties. So, to summarize, interest rates on platforms like CashNetUSA are determined by a combination of macroeconomic factors, your personal creditworthiness, loan terms, and state regulations. While some factors are beyond your control, improving your credit score and shopping around for the best offer can significantly impact the interest rate you're offered. With that said, thanks for watching, and until next time.